Hello everyone, welcome back to Nandu's Equity. Today we are going to see what is swing trading and how to use Screener to identify top stocks for 2025 swing trading, how that formula can be used on any day, and of course we are going to see essentials for swing trading. So what is swing trading to start with? It's a very popular strategy that involves capturing short to medium term gains in any of the financial instruments over a period of few days to several weeks. So it could be even one day in an intraday or in few days or sometimes few weeks. So within about 2 months time frame, we are able to capture some benefit or gain profit within that time. That is swing trading. We want to see 10 top things to be mindful about swing trading. Number one thing is time frame. So time frame is very important because it spans about couple of days to maximum 8 weeks. Within that time we need to get rid. So traders aim to capture short to medium term price movements within this time frame. Trend is very important in swing trading. Swing traders often rely on technical analysis to identify trends in the market. They look for stocks or other assets that are trending upwards or downwards, aiming to enter positions in the direction of the trend. So when it is upward, cash position is possible. When it is downward, cash positions are not really possible. We need to use F&O mostly to trade in swing trading. Unlike long-term investments, entry and exit positions or points are very important in swing trading. So swing traders look for clear entry points when they believe a stock or asset is poised to make a short to medium term price move. This may involve identifying support and resistance level, chart patterns, and even using some of the technical indicators like MACD or moving averages or RSI to gauge the potential entry points. Exit points are determined based on the profit targets or predefined risk management rules. Risk management is very critical in swing trading because traders often use stop loss orders to limit potential losses if the trade moves against them. They also consider the risk reward ratio, aiming for trades where potential reward outweighs the risk. Psychology is very important in swing trading, and also we need to maintain clear discipline how we want to trade and totally in control in terms of emotion. So traders must be able to stick to their trading plan, manage emotions such as fear or greed, and not let short-term fluctuations affect their decision making. Managing emotions is very important. Emotions can definitely mount as judgment sometimes lead to impulsive decisions. So stay disciplined and stick to your trading plan even when faced with market volatility or unexpected events. Avoid chasing after losses or letting greed influence your trading decisions. Do not do revenge trading. So these are the very important things in terms of maintaining the psychology for swing trading. Successful swing traders often develop and refine their strategies through backtesting. Backtesting nothing but testing their trading ideas on historical data to see how they would have performed in the past. So this helps in fine-tuning strategies and also identifying patterns that work best in different market conditions. Markets evolve over time and successful swing traders continuously educate themselves, staying updated on market developments, new trading techniques, and also refining the old strategies accordingly. Technical analysis is the foundation of swing trading. Familiarize yourself with common technical indicators, chart patterns, and trend analysis techniques used by swing traders. Some key indicators including moving averages, RSI, MACD, and even Bollinger Bands. The most important thing in swing trading is to develop a trading plan, and it outlines what is the strategy and when is the entry and exit criteria, how to manage risk, and also position sizing. Define your trading goals, risk tolerance, preferred trading time frames so that you will be able to stick to the trading plan. Your plan should also include rules for managing trades and adapting to changing market conditions. So there are several strategies, and at least we should learn about 4 swing trading strategies so that we will be able to deploy the right one at the right time. Swing trading strategies alone require separate videos for each. So I'm just going to outline what it is. For example, the number one trend following is the number one strategy. So buy when the stock is in uptrend, confirmed by moving averages, and exit. Very simple. You have to just go with the market trend. So that is called trend following. So breakout trading is the second biggest followed trading strategy. So whenever a particular stock or index or any for even commodity breaks out with higher volume that has never been seen in the past, so then they will immediately enter such stocks. So that is called breakout trading. No stock can go always in one direction. That is the basic concept of reversal trading. So when a stock is oversold or overbought, it has to reverse. So you can easily identify that using RSI and MACD. So the moment it reverses, the swing traders will enter such stocks and with all the clear plan of entry exit points. The most important strategy I would say is support and resistance. So if you learn how to identify support and resistance, you can easily do swing trading. So trade at key levels where price tends to bounce or reverse. So that's a basic concept. And also it can be used even in day trading. And of course, you need to definitely learn the technical analysis to understand support and resistance. So it is not a complex screener query, but which is little longer. We always wanted to see more than small caps, so the market cap size is more than 5,000. And of course, EPS, ROE, ROCE, you can set as you wish. And very importantly, you need to check for average returns for 5 years more than 10 or 15%. So the important portion of the query is the current price should be above 50 days moving average and 200-day moving average. And of course, we can also see the stocks that are between the range of 40 to 70 from relative strength index, that is RSI. And that is very important because we are trying to identify stocks without using the charts, rather candlestick charts, rather we are trying to identify first in the screener. The very important next one is volume. So volume should be more than last 1 year average. So that way what happens, something as a breakout stock you can easily identify. So these are very simple things. You can add up anything related to P ratio, PEG ratio, and promoter holding, FIA holding. Like this you can add up and easily find stocks that are really touching the peaks. So from this screener query, we identified there are about 20 plus stocks that topped out. So from that we have shortlisted the top 10. So Ganesh Housing is number one. I think we reviewed this particular stock in our multi-bagger stocks. And of course, this is kind of available about 10% below its all-time high. And looking at its P ratio, PEG ratio is quite cheaper and with very strong fundamentals like EPS, ROE, ROCE. The second stock in our list is Tyronics Performance. So this is about a chemical company which is having about 50% market share for the ABS resin chemical. And you might have heard BPL with 25% market share. These are the only two companies available in the listed companies where having a huge market share for one chemical. So that's why this is available so expensive. So it has gone up to 3,100 level and then now it is down by 7%. And of course it's a small cap to mid cap now. And PEG ratio, P ratio available cheaper. Definitely not compared to its industry PE. And of course, because of its market share, this is kind of a very attractive stock. So having a very strong EPS, ROE and ROCE. We have talked about Redington a lot of time, and of course this is one of the company that is kind of importing and reselling all the mobile phones and are having a brand exposure of about 280 different brands. So very strong business and it's a clear mid-cap company. Very soon it might become a large cap also after it crosses 20,000 market cap. So at this time it is quite available cheaper, I would say, from both P and PEG ratio perspective, and 14% from down from its all-time high, having a very good EPS, ROE and ROCE. Due to rupee value fluctuation and recent crash, all the export companies like pharma and IT companies are going up. Dr. Reddy is one of the fundamentally strong company that is kind of going higher, very close to its all-time high. Very soon it might touch that also. and of course available cheaper from PE and PEG ratio perspective, having very strong fundamentals, whether it is numbers or its business. We have reviewed this particular stock, Zydus Life Science, in one of the modes in the sugar-free sachets, and of course it's a good large cap company with strong fundamentals, and whether it is EPS, ROE, ROC, all are really good. Available cheaper by 24% from its all-time high, and of course PEG ratio is kind of above 1. However, this stock is still very lucrative at this moment for swing trading. The entire paint manufacturing sector is quite disrupted currently, and there are a lot of participants now to really shake Asian paints. So AkzoNobel is one of them. It's a mid-cap company. Of course, not available cheaper, but from a RSI volume perspective, this has topped out from that list. And currently available 20% cheaper from its all-time high, and with strong fundamentals like EPS, ROE and ROC. Infosys in our list because all the IT companies are kind of going to touch new highs, of course because of the rupee dollar valuation, and until we do not hear any bad news from US like recession, these companies will potentially go further up. And another reason is TCS released its quarterly results, which was favorable, and that stock had gone about 4% high, and all the stocks closer to the same range, they are also going high. So Infosys is one of them, and of course Infosys with its long-term history having very strong fundamentals, no doubt about it. However, from a PE and PEG ratio perspective, it is not available cheaper. But for swing trading, we cannot really see the valuation perspective. So this is still a very good pick for swing trading. In the same list, for the same reasons, Persistent Systems also filtered out. Good candidate for swing trading, almost 7% down from its all-time high. Of course, you cannot really look at its valuations, but of course a very good, fundamentally strong IT company. I would say out of the all current IT tops companies, HCL would be the topper because it's almost closer to its all-time high, and from here it will definitely go set a new high, whether it is 52-week high or all-time high. And despite that, looking at its PEG ratio, P ratio, it's kind of available costly only, and out of all that, still having very strong fundamentals, very clear candidate for swing trading, because when it comes to swing trading, anything going to touch the 52-week high or closer to the 52-week high will be a very good candidate, because after that only it will go further up. Sometime it may even go 10-20% up and then start reversing. I already talked about TCS, which has just released its quarterly results, and market really liked it, and it has already gone up. However, very closer to its all-time high, 7% down actually from all-time high, and there is higher possibility of touching that. But however, we are also hearing a lot of mixed news from US. For example, Salesforce is going to stop all their recruitment in the coming months, and they're not going to recruit anyone. So that is a shocker this weekend, and there is a possibility of reflection of those kind of news in all IT companies. So by the time you watch this and go to next week, there is a possibility of all these IT company reversing also. Swing trading heavily rely on technical analysis, but we did not cover technical analysis as part of this video. But if you want to do swing trading, please learn technical analysis. Then only you will be a good swing trader. And of course, the way it is now with IT and pharma, if IT reverses in the current trend, there is a possibility of little crash, because as I already mentioned, Salesforce is going to stop its recruitment. This is a big news. And of course, there are a lot of quarterly results going to come in coming weeks that may also decide the trend. So these particular stocks we cannot rely on forever, but very good candidates for swing trading. Of course, you can use this formula every now and then to check which one is coming out of the category. and always use technical analysis for confirmation and then only enter. So none of these stocks are buy or sell recommendation, so please be careful. Thank you for watching.